Hello everyone and welcome back to the Research Talks here from Stopbox with Alan Green and Dan Flynn. So, how's the week been for everyone? Anything catching your eye, Alan?
Well, it's mainly on the sporting front. It's the rugby yesterday where I was chatting to my brother-in-law and sister who were in Rome watching it and accusing the coach of total ineptitude. And then, of course, as Dan and I have just been discussing Spurs. So obviously the markets have crashed through the floor because of, I think when we spoke last week, the invasion was about taking place, wasn't it? So, of course, we've seen a big drop in the markets naturally this week. My portfolio is down about 7%, I suppose, overall. But yeah, I think as ever, in times of war, opportunities are created, and there are opportunities to pick up stocks at much lower prices. Stocks that deliver decent dividend yields. So if you're that way inclined, there's a market to choose from.
Yes, it's definitely uncertain times for sure. Dan, what about you? What's been going on in your world?
Yeah, much the same. Just been watching the macro situation there. I mean, obviously, it varies a lot different day to day. And when everything's down, you think this could be a good buying opportunity, but then you don't know how long this conflict's going to last, do you? And if it could go down further. So it's a little bit of a tricky one. But I have been adding to some positions that do look quite attractive on the day-to-day basis when there is a weekday. So it'll be resolved fairly soon.
Yes, let's hope so. Well, let's talk about some stocks that are perhaps worth a look at. So Blencowe, Alan, of course, doing very well. I spoke to Mike in London in December, and they've had a very good year. And of course, they went straight to the US after that to sign a deal. So bring us up to speed, Alan.
Blencowe have just been blazing a trail. I mean, it's a real success story. This and it's great to see, and all of the team have worked immensely hard to get the company to where it is. But I mean, we're going back to 2019 when Blencowe basically acquired 100% of Consolidated African Resources, owner of the Orme Cross graphite project. And it is a huge project. This covers in total some sort of 2,000 hectares. It's a massive area. And as they've honed in on the high grade zones and developed certain elements of the project, what has become apparent is that everywhere you go in this project, you could literally drive a tractor and hoe over the land and pull this flake graphite out of the ground. It is quite astonishing. So the company's currently trading at 10.4p, market capitalization of just on 50 million. And given the scale of where we are, certainly I'm not alone in thinking this is massively undervalued. And it's been a very busy 4 months. The company announced a DFS or completed the DFS on the Orme Cross project it was announced on 1st of December last year. DFS highlights NPV of just over $1 billion US, internal rate of return 96%, free cash flow 2 billion over 15 years. Now, this is on the initial project, and the high load or the high grade zones and camp load literally cover about 1% of the total project area. So of course we then move on from there. The company identified 2 further prospects, the Iron prospect and also the Beehive prospect, and they announced on the 9th of January outstanding results on 90-meter intercepts across the Beehive project, and we're looking at total graphite content 6%, and consistent results all the way through. And this is what's becoming apparent. The results from camp load, the results from Beehive, and then latterly the results from the Iron, that's spelled IYAN, also showed consistent results too. And the company announced last week, or 6th of March, a maiden 16.9 million ton JORC mineral resource for the iron deposit. Now, you add this on top of the DFS, that basically represents a 66% uplift in the JORC resource. So the total Orm-Cross revised JORC mineral resource this year is now 43 million tonnes at 5.76 total graphite content, and this is high quality graphite too. It's not just it's not just your run of the mill stuff. This is high quality, so much so that in last month the company announced that test work that it had undertaken, or that was undertaken by American energy technology company in Chicago, concluded that the graphite concentrates from our own cross are suitable for the manufacture of synthetic industrial diamonds, and of course that just opens up a whole new opportunity commercially for the on cross product further down the line. So it's just been one story of success after another. We've obviously yet to hear what the Beehive prospect will have overall on the Orm-Cross JORC resource estimate, but also it's not just those. As I say, you go anywhere on the Orm-Cross project, and you can almost pull this graphite out of the ground. So as this project develops, it's going to become absolutely huge. And of course, we've spoken about sovereign metals. The Cassia resource there, of course, they've got this enormous rutile project and also an enormous graphite project there, which is one of the largest in the world. But Orm-Cross, I think, is going to get pretty close to matching it in size once it's fully developed. And certainly, I said I'm not alone in my view here. Oak Securities initiated coverage of Blencowe resources in January this year. Now, I said the company is currently trading on 10.4p. It's got an initial target, given that first production for graphite is in Q1 next year, an initial price target of 33.7p. Now, that would roughly give Blencowe, given the amount of shares in circulation, roughly give them a market cap of about 160 million sterling. Now you compare that to other listed graphite companies. You've got Graphite India, which is 13.35 billion. You've got Sovereign Metals, which has a market cap of about 280 million. Nouveau Monde Graphite, 483 million Canadian dollars. That's about 250 million. So I think the quality of the graphite, and given where Orm-Cross is at the moment, I think it warrants a market capitalization probably well in excess of the Oak Securities target. But certainly, I fully expect, given the development so far, we're going to see a very strong move upwards from Blencowe as Q1 develops, and of course, as we hear more about the potential for the Beehive estimate added to the overall JORC resource.
It'll come in time. I'm sure it'll come in time. It's been around for a long time, really blazing a trail, like you say. They've got a great deposit there and great backing now on the radars of many. So the recognition will surely come.
Yes, indeed.
Great. Well, thanks, Alan. So Dan, Conroy Gold then. I know we haven't spoken about them for a while, but bring us up to speed on what's going on with Conroy.
So Conroy's another one I own shares in, and this week it released a drilling update that has started to hint at something we've all been waiting to see for a while, which is the possibility of gold upside at depth at the Clontibret deposit. So first, a quick recap of the broader story. Conroy controls the District Gold project in Ireland. This is a district-scale gold system covering around 1,000 square kilometres alongside a structural corridor that also hosts multi-million-ounce deposits in Newfoundland in Canada. Within that land holding, the company has identified two large gold trends called Orlok and Skull Martin, which effectively form a nationally significant gold belt. And the most advanced part of that project is the Clontibret deposit, which already hosts a JORC resource of around 517,000 ounces of gold at roughly 2 grams per tonne. But importantly, that resource is only based on around 20% of the target anomaly identified so far and is open in multiple directions. So the exploration upside there is potentially much larger. So the geological idea that really underpins the investment case here is that Clontibret shows some striking similarities to the Fosterville deposit in Australia. And if you follow the gold sector, you'll know that Fosterville famously evolved from a relatively modest deposit into one of the highest grade gold mines in the world once drilling began targeting deeper structures. What happened there was that low-grade refractory mineralization transitioned into extremely high-grade free gold zones at depth. So the question Conroy is trying to answer is whether the same geological process happened at Clontepret as it did at Fosterville. So historically, drilling at Clontepret has focused mostly on shallower levels of the system. The company Conroy recently began a new 2,000-meter drilling campaign specifically designed to test deeper structural plunge zones. These targets extend well beyond the depths previously drilled, with holes now pushing down towards 500 meters and beyond. The aim is to see whether those deeper structures host more concentrated gold mineralization. And the company believes this could hold the key to multi-million ounce potential, as is the case of Fosterville. And that's what this week's update starts to explore. I mean, in the latest drill results, the company reported the deepest gold mineralization intersected at Clontepret to date. The first hole reported in the program intersected more than 10 gold lodes and extended the mineralization further north. One of the standout intercepts came in at roughly 2.8 meters, grading 4.5 grams per ton gold, including half a meter at 15 grams per ton. So the grades themselves are good. They're not spectacular yet. We want to see, good grades over long intercepts and getting over that 100-gram meter point. But they are moving in the right direction. And importantly for now, perhaps more importantly, they help confirm that the mineralized system continues at depth, which is exactly what the company was hoping to demonstrate. But this is just the beginning of the drilling campaign. There are many more holes still to come as it progresses, and these are going to be extremely important because what investors will really be watching for now is whether grades continue to improve as the depths get greater. If the system does begin to show high-grade zones at depth, similar to what happened at Fosterville, then the geological model becomes really compelling, and that's where the market may start to reassess the potential scale of the deposit. So moving on, it's important to remember that Clontepret is just one part of the story. The bigger picture here is the entire Disc of Gold district. Across this massive land package, the company's already identified multiple exploration targets. There's one called Clay Lake, where drilling has intersected 100 meters at 0.6 grams per ton gold, mineralization open in all directions, and another one called Creamkill. Early exploration has produced surface samples grading up to 123 grams per ton gold. So there are multiple opportunities for additional discoveries across the belt already, which basically means that Clontepret could eventually just become one part of a much larger district-scale gold system, and that's the long-term opportunity here. On the corporate side, there's also some important developments to watch. At the end, in an update at the end of last month, Conroy said it remains in discussions with prospective strategic and financial investors regarding funding for future investment into Disc of Gold. Partnership at the asset level like that could help accelerate exploration and go a long way towards validating the scale of that district size project opportunity beyond Clontepret alone. Alongside that, Conroy is also exploring a potential dual listing on the TSX Venture Exchange in Canada. That could be quite meaningful because, as we discussed before, Canada has a large investor base focused on junior mining stocks, so a listing there could potentially bring greater visibility and liquidity to the story. So I think just to round up, when you step back and look at the valuation, Conroy currently has a market cap of around £12 million, which is pretty small for a company controlling a district-scale potential gold project in a stable jurisdiction like Ireland. So the investment case here really hinges on a few catalysts. There's the drill results from the deeper program at Clontepret. There's potential funding or strategic investment into the project, and obviously the potential of that listing in Canada. I think if deeper drilling does begin to confirm high-grade mineralization at depth, then the geological story here could start to look very different from the market currently assumes. And this is a drill-driven story unfolding in real time. So the latest results, positive early signal. Now I'll be watching closely to see if the next round of holes builds on that momentum, and then we can start to see the market react, hopefully.
Yes, indeed. And interesting that you mentioned that they were pursuing a listing in Canada. I know they've had a lot of interest from Canada before. They're always going to the PDAC conference. And it seems the way a lot of London companies are going at the moment, isn't it? Going for that Canadian listing to attract the capital over there, which is perhaps a bit more mining focused, let's say. And of course, it's a great time to be doing that with the macro environment, and a great time to be in gold, looking for gold. Well, I know they've already got gold, but it's more about,
The scale, yeah.
the scale, and how to attack it.
Yeah.
Good, excellent. Well, hopefully we can hear a bit more from Conroy in the near future then. So, Alan, over to you. One Health Group.
One Health Group, we've spoken about a few times, and of course the company last year moved from Aquis to AIM, and that process always takes a long time. We've got other companies that are on that journey now, of course Mendel Helium being one such. So One Health Group provides medical services in the form of elective surgical care to support the NHS. It was incorporated in 2001, and the existing business was established in 2004 by Derek Bickerstaff, who is a practicing consultant surgeon. Derek is still the chairman of the company. Adam Binns is the chief executive, and it currently engages some 80 NHS consultants who specialise in various surgeries through a growing network of community-based outreach clinics and surgical operating locations and hubs. It's focused on four main areas: orthopedics, spine, general surgery, and gynecology, and also introduced urology at the end of last year too. So where it was set up primarily to serve areas where NHS patient needs are undersupplied by the local NHS service, and also the population density is relatively high. And indeed, this has proven highly successful so far. So the company is, as I say, moved from Aquis to AIM last year, currently trading at 249 pence, giving a market capitalisation of about 34 million sterling. And the backdrop to the activities over the past year have really been about getting to complete the first surgical hub. And indeed, the company announced that this was announced 24th February, that planning and sign-off and commencement of surgical hub construction was underway at Scunthorpe in Lincolnshire, and construction's underway now. And it's expected to be completed within a year, within the previous cost estimates the company provided of between 8 to 9 million. And what the company is aiming to do is to, once this is built up and running, it's going to aim to replicate this at those important areas around the UK, as I've described, where a relatively dense population is underserved by existing NHS facilities. It's certainly growing rapidly, and the company is currently trading well. It provided a trading update along with news of the surgical hub in February. Also, second half trading for the year remains strong. The business is on track to deliver growth at the revenue and underlying EBITDA levels for March 26 in line with expectations. And those expectations are for revenue forecast of between 29.2 and 29.6 million, an underlying EBITDA of 2.3 million across consensus. And that's against a market capitalization of, as I say, 34 million. So plenty of upside expected to come. And we're going to see many more surgical hubs, I'm sure, springing up as we go forward. Interesting to note also that the chief executive, Adam Binns, stuck his hand in his pocket, made three purchases, spent about £11,000 as far as I can see. But that's encouraging to see. Always nice to see a CEO with skin in the game and adding to that skin in the game. So, one to watch. Exciting progress so far. Nice looking chart. Since the trading update, we've seen the shares jump from just about 213p all the way up to the current level of 249p. So more to come.
Excellent. Thank you, Alan. A great little succinct summary there. Okay, so Dan, back to you then. Batala Energy. So a new company onto Stockbox. They're in LNG. I know you interviewed them this week. Tell us about them.
Yeah, this is a new one for us, but it's a really interesting story. Batala's trying to bring new gas supply into Southern Africa, just as the region heads towards a major gas shortage. And yet today the company is valued at only 17 million Aussie dollars. So clearly, if the project works, which I think it will, there's potential for a significant valuation gap to close. So let's start with the bigger picture a little bit first. Southern Africa is heading towards what you might call a gas cliff. Existing supplies in the region are expected to decline over the coming years, while demand from industry, mining, power generation, etc., continuing to grow. That means new local gas projects are becoming increasingly strategically essential. This is exactly the opportunity Botala is targeting. The company's core asset is the Sarawe coal bed methane project in Botswana. Coal bed methane is essentially natural gas trapped within coal seams. And over in Australia's energy sector, this is exactly the type of resource that built the massive gas industry in Queensland. So Batala's project is obviously much earlier stage at the moment, but the geological concept is broadly similar. And importantly, the company not only controls a very large project footprint, which is around 4,200 square kilometers of licenses, but it's also backed by the Botswana government, which has gone ahead with acquiring a 15% stake in Sarawe. So right now, Batala is working through what's known as a pilot program. This involves drilling and testing wells to understand how the gas flows from the reservoir and how best to stimulate the coal seams to improve permeability. So far, several pilot wells have been drilled, and recent work has focused on stimulation techniques designed to improve reservoir performance, with the latest update showing encouraging signs of improved permeability, which included stronger pressure responses and increased water flow. So that might not sound too exciting on the surface, but in these projects, permeability really is key. If you can get the gas moving efficiently through the reservoir, then that's when the project starts to begin looking really commercially viable. Now, the next major step at Sarawe is a central production well called 3.5B. And this is an important one because it's designed to move the project beyond reservoir testing and towards demonstrating sustained commercial gas flow. The well is expected to spud over the coming weeks. And remarkably, the full cost of drilling and completing a well for production at this project is around 145,000 Aussie dollars. That's really low compared to equivalent projects elsewhere in the world. So basically, if this well delivers the flow rates the company is targeting, then Botala could begin transitioning from an exploration-style pilot program into early-stage, low-cost gas production. And that's where the development strategy becomes interesting from an investment perspective. Botala isn't planning a single large development all at once. Instead, the project is designed to scale in phases. We're in phase one at the moment, which consists of those 4 pilot wells and that 1 production well. And it's used to determine production rates, communication between the wells, how they should be spaced. It's going to be used to recertify resources to reserves, and it's going to be used to complete a bankable feasibility study. So this is essentially the proof of concept. And it paves the way for the next phases, which involve steadily increasing production with more wells and the deployment of more of these mini LNG units on site. Importantly as well, the company also has an anchor offtake agreement with a company called Score for 3.5 petajoules of energy a year. So there's already a clear initial customer for the gas once production begins, which is also important. So as these phases are built out, the potential revenues scale up significantly. I mean, based on Batala's development plan in its presentation, phase 2, which increases to 9 wells, could generate around 2.65 million Australian dollars a year. Phase 3, which increases to 36 wells, grows that to 10.6 million annually. And phase 4, which is where Batala would reach that 3.5 petajoule of gas per year mark, could see revenues reach 37.1 million Aussie dollars annually. Now, of course, those numbers depend on successful drilling and development, but they do give a sense of the potential scale of the project compared with the company's current 17 million valuation. And finally, and very importantly, that 3.5 petajoule development plan is just the start when it comes to the full potential at Sarawe. According to management, the company already has around 471 petajoules of certified 2C gas resource at the project. That equates to roughly 136 years of gas supply at that 3.5 petajoule rate. And that resource base has been defined from only about 5% of the project's area. So the long-term upside isn't just about scaling to 3.5 petajoules per year. It's the potential for the resource base itself to expand as more of the acreage is explored and developed. And this is where the comparison with Queensland's coal seam gas industry becomes interesting. Over there, coal seam gas projects also began with small pilot well programs, but once the reservoirs were understood and development expanded, the industry eventually scaled into a multi-billion-dollar LNG sector. So it's obviously too early to say Botala will follow that same path, but it does illustrate how these things grow. The real inflection point for Batala begins with 3.5B. If that demonstrates sustained commercial gas flows, then the company effectively enters a new phase of its development. From that point, you're looking at bankable feasibility study, more production wells, more gas sales, growing revenue, and the wellfield expansion. So in other words, the company's transitioning from a gas explorer to producer. And when you step back and look at the valuation, Batala Energy today is still trading around 17 million market cap. So investors will be watching the next few months closely, I think. Key catalysts will be the results from that well, continued pilot well testing, delivery of a bankable feasibility study, and progress towards early stage LED production. I think if those milestones are achieved, then the market may begin to reassess the opportunity here. Because today the company's priced like a very early stage exploration story, but successful drilling could begin to shift the narrative towards a small but growing gas producer entering a region facing a structural energy shortage. And that's why the next phase of development here is so important. I'm definitely got it on my watch list, and looking forward to speaking again to the company as they put some more news out as that development plan plays out.
Good. Thank you, Dan. And LNG, like I say, a little bit different, isn't it? You don't often get an LNG play.
No, it's not one I've covered on here before, and it's nice to have a bit of diversification in the sort of stocks you're looking at, isn't it?
Yeah.
Excellent. Well, thank you both very much for your time. Do enjoy your weekends, and we'll indeed see what next week brings. But thank you very much.
Definitely. Cheers, guys.
Cheers, Mark. Cheers, Dan. Have a good weekend.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.